Unit 10. Escrow and Title Insurance Learning Objectives. When you have completed this unit, you will be able to list the requirements to create a valid escrow for a real estate sale. Identify escrow practices that differ from Northern to Southern California. A. Describe the escrow law and its exemptions. A. List the requirements for a real estate broker to serve as an escrow agent. A. Identify the stages of the escrow process and the duties of the participants. A. Describe the contents of a closing disclosure form. And A. Define the various types of title insurance used in California. Key terms: abstract of title, beneficiary statement, binding contract, certificate of title, close of escrow, conditional delivery, demand for payoff, escrow, escrow agent, escrow holder, escrow instructions, escrow officer, extended coverage, policy, general indexes, guarantee of title, interpleader, loan commitment, lot books, preliminary report, settlement statement, standard policy, title insurance company, title plant, summary. The many steps involved in carrying out a real estate transaction proceed most efficiently when an escrow agent is appointed by the parties. The escrow, as an impartial third party, can collect the necessary paperwork on funds and make the required distribution only when all preconditions have been met. The interests of both buyer and seller can thus be protected. To create a valid escrow, there must be a binding contract and conditional delivery of instruments of transfer to the escrow holder. An escrow agent must be licensed by the state, with certain exceptions. If the parties cannot agree on terms, the escrow holder can bring a legal action known as interpleader to have a court determine the rights of the parties. California_E_principles_10E_book.indb 331 23 May 2017 2:31 and 9 seconds p.m. 332 California Real Estate Principles 10th edition. The lender of the seller will make a demand for payoff or submit a beneficiary statement if title is to be taken subject to an existing loan. The lender of the buyer will submit a loan package requiring an appraisal and hazard insurance, among other items. A preliminary report will indicate the current owner of record of the property and any encumbrances of record. A structural pest control report may indicate needed repairs. When all conditions have been met, the escrow is complete. A settlement statement summarizes the collection and distribution of the proceeds of the sale. Above all, the buyer wants a marketable title one a prudent person would accept. Through various forms of title examination and verification, the present system of title insurance has been devised. A standard policy insures against certain risks. An extended coverage policy provides more extensive coverage and is particularly useful to lenders. Referral fees for placement or referral of title business are never allowed. If title insurance will not be issued as part of the escrow for the purchase or simultaneous exchange of real property, notice must be given to the purchaser or parties to the exchange. Open for discussion. As you learned in this unit, the details of the escrow process vary throughout the state. The number of documents produced during even a modest home purchase can be staggering. 1. Suggest ways in which the escrow process might be simplified. California_E_principles_10E_book.indb 332 23 May 2017 2:31 and 9 seconds p.m. Unit 10 Escrow and Title Insurance 333. Review questions. 1. To create an escrow, there must be a binding contract, b. unconditional delivery, c. real property, d. all of these. 2. Escrow instructions can be a. changed by oral agreement, b. only unilateral, c. changed only by written agreement of both parties, d. all of these. 3. The escrow holder acts in the capacity of a. mediator, b. agent of both parties, c. advisor on the transaction, d. surety. 4. Which must be licensed as escrow agents to perform such services: a. attorneys, b. title insurance companies, c. banks, d. escrow companies. 5. In Southern California, escrows are most often held by a. savings and loan associations, b. escrow companies, c. title insurance companies, d. Attorneys. 6. By law, a licensed escrow agent must a. Pay a referral fee to a real estate agent. b. Disclose information concerning the transaction to outside parties. c. Be a corporation. d. Have a real estate broker's license. 7. A real estate broker can serve as an escrow a. Through associates. b. With other brokers. c. When she represents one of the parties to the transaction. d. Under a fictitious business name. 8. The legal action that may be brought by an escrow holder is a. Quiet title. b. Interpleader. c. Adverse possession. d. Injunction. 9. Providing a copy of any buyer-broker agreement is the responsibility of a. The buyer. b. The seller. c. The escrow agent. d. The real estate agent. 10. Providing tenant information is the responsibility of a. The buyer. b. The seller. c. The escrow agent. d. The real estate agent. 11. Prorations at closing on amounts other than interest payments usually are based on a. 30-day month. b. A 31-day month. c. The actual calendar number of days. d. The number of days indicated by the buyer. 12. If closing is on May 19, what amount will be charged to the buyers on a total property tax of $4,320 paid by the sellers for the current tax year? Remember to use the standard number of days in the month. a. $492. b. $504. c. $1,584. d. $1,728. 13. Closing is on June 15, and rent of $2,400 has been prepaid for the current month. What amount will the seller be debited at closing if the buyer receives credit for the day of closing? a. $1,280. b. $1,200. c. $1,350. d. $2,200. California_E_principles_10E_book.indb 333 the 23rd of May 2017 2:31 and 9 seconds p.m. 3:34 California Real Estate Principles 10th edition 14. A buyer's settlement statement includes a. Only prorations chargeable to the buyer. b. The borrower's loan application. c. Loan origination fees. d. All encumbrances of record. 15. The most thorough method of title check results in a. An abstract of title. b. A certificate of title. c. A guarantee of title. d. A policy of title insurance. 16. A title plant consists of a. All possible title records. b. A title company's logbooks and general indexes. c. Recorded and unrecorded title information. d. Duplicates of county recorders' records. 17. Title insurance is paid as of the day a. escrow opens. b. The sales contract is executed. c. Of closing. d. The buyer takes possession. 18. Title insurance protects a buyer against a. All claims from any source. b. All claims except those excluded by the policy. c. Claims arising from the buyer's future actions. d. Any claims the buyer already knows about. 19. Water rights are excluded from coverage in a. A standard policy of title insurance. b. An extended coverage policy of title insurance. c. A warranty deed. d. All residential title insurance policies. 20. Lender's title insurance typically is paid by a. The buyer. b. The seller. c. The lender. d. The broker. Escrow. An escrow is the possession by a neutral third person of money, a written instrument, evidence of title, or another thing of value that is received from one party to a transaction for delivery to the other party to the transaction on the performance of one or more conditions at a specified time. An escrow can involve the sale, transfer, encumbering, or leasing of real property, such as a house or an office building. An escrow also can help in a transaction involving personal property, including what is known as a bulk sale, which involves the transfer of a business or a business license or permit. The emphasis in this unit is on the use of an escrow in the sale of real estate. The person who performs escrow duties is called an escrow agent or escrow holder. As an agent of both buyer and seller, the escrow holder receives and dispenses the required money or documents and carries out whatever paperwork is needed to facilitate their transfer. The escrow holder's task is not to force the parties to fulfill their obligations but to ensure that those obligations are fulfilled before the sale is closed, the funds are released, and the buyer takes title. The escrow holder in a sale of real estate usually combines the following two separate functions in one transaction. A. The sale itself. A. The loan that finances the sale. The escrow holder is instructed to collect all necessary funds and documents with proper execution and required acknowledgements. The typical residential sales transaction may involve a dozen or more separate documents, from the transfer deed to the promissory note and security instrument, a title report, and some disclosure statements. The escrow holder's duties may include a preparation of the necessary documents, a calculation of the prorations, adjustments, and charges to be assessed against each party, and a verification that all required documents and funds are on hand before the necessary transfers are made. When all conditions to the sale have been met, the escrow agent can complete the transaction by transferring the relevant documents and funds. At close of escrow, the escrow agent provides each party with a settlement statement that itemizes all receipts and disbursements. The closing itself may take more than one day. Buyer and seller do not need to be present for closing. Because funds and documents are collected before closing, buyer and seller may never meet. California_E_principles_10E_book.in 298 the 23rd of May 2017 2:30 and 43 seconds p.m. Unit 10 Escrow and Title Insurance 299. Creating an escrow. To create a valid escrow for a real estate sale, two requirements must be met: a binding contract and conditional delivery of the necessary documents and funds. Binding contract. There must be a binding contract between the buyer and seller. The contract can be a purchase contract and receipt for deposit, an agreement of sale, an option, an exchange agreement, or any other legally binding document. Between the buyer and lender, the agreement usually is in the form of a loan commitment specifying the loan terms. Conditional delivery. There also must be a conditional delivery of the instruments of transfer to the escrow holder. Instruments of transfer include a money, the deed transferring title from grantor to grantee, a loan documents, and other required paperwork. The delivery of all instruments of transfer is conditioned on the successful fulfillment of both the contract terms and any new terms imposed by the agreement. Establishing the escrow. Escrow instructions. The escrow agent is given written escrow instructions to carry out the terms of the contract that is the basis of the transaction. If the escrow instructions differ from the terms of the underlying agreement, such as a purchase contract, the most recent in time controls, the escrow holder must follow the escrow instructions and can be held liable for failing to do so. Escrow instructions are called bilateral when they are given by both parties jointly. The escrow instructions are unilateral when they are given separately by each of the parties. North versus South. In Northern California, the general practice is to use unilateral escrow instructions. In Southern California, the general practice is to use bilateral escrow instructions. After instructions to the escrow holder have been signed by the parties, neither can change the instructions unilaterally. If both parties agree, they may amend. California_E_principles_10E_book.in 299 the 23rd of May 2017 2:30 and 43 seconds p.m. 300 California Real Estate Principles 10th edition. The escrow instructions. At any time, it is necessary to have the agreement of both parties on every matter affecting the transaction, even if it is a condition that is to be waived by only one party. The escrow as agent. A limited agency relationship is established between the escrow holder and the principals to the transaction, defined by the responsibilities set out in the escrow instructions. When escrow is first established, The escrow holder is the agent of both parties. As the conditions to the transaction are performed, the escrow holder acts as the agent of each party as necessary to complete the transaction. For example, the escrow holder acts as the agent of the grantor when the deed is delivered to the grantee. The escrow holder acts as the agent of the grantee in delivering the purchase price to the grantor. Ordinarily, the escrow holder should not be a party to the transaction. There is an exception for licensed real estate brokers, as you will learn later in this unit. Unless an exception applies, the escrow holder should not give advice on any part of the transaction and should remain impartial. Who may be an escrow? The California Financial Code contains the escrow law. It describes the legal requirements to act as an escrow agent. An escrow agent must be licensed by the Department of Business Oversight, www.dbo.car.gov, unless entitled to an exemption from licensing. Exemptions from escrow licensing. There are exemptions from escrow licensing requirements for A banks, A savings and loan associations, A title insurance companies, A attorneys, and A real estate brokers. Section 12389 of the California Insurance Code was amended in 2015 to include rules governing what are termed underwritten title companies that are similar to the rules governing independent escrow companies. Real estate brokers who act as escrow agents are subject to special rules discussed in the section The Real Estate Broker as Escrow Agent. North versus South. In Northern California, escrow typically is handled by the title insurance company. In Southern California, separately licensed escrow companies often are used, and financial institutions also perform many escrows. The escrow holder acts as an agent only in a very limited capacity. www.dbo.car.gov California_E_principles_10E_book.indb 300 the 23rd of May 2017 2:30 and 43 seconds p.m. Unit 10 Escrow and Title Insurance 301 General Requirements. A license to act as an escrow agent can be held only by a corporation. An individual cannot receive such a license. The licensed corporation must be solvent and furnish a $25,000 surety bond. There are also certain liquidity and tangible net worth requirements. An escrow agent must keep accurate records and accounts, which may be audited by the Department of Business Oversight. Every fiscal year, the escrow agent, at the escrow agent's expense, must submit an independent audit prepared by a public accountant or certified public accountant to the department. An escrow agent is not allowed to do the following: A. Pay a referral fee, a commission, or any other compensation, including gifts of merchandise, to anyone other than employees of the escrow agent. A. Disclose any information concerning the transaction to outside parties. Each party to the transaction may be informed of instructions of another party only when those instructions form a part of the original contract. A solicit or accept escrow instructions or amendments that contain blanks to be filled in after the escrow instructions are signed. A. Give advice in tax and legal matters. The escrow agent is not a supervisor or guarantor of the soundness or advisability of the transaction. The real estate broker as escrow agent. As already noted, a real estate broker need not be licensed as an escrow agent to perform the duties of an escrow. There are, however, strict requirements established by both the Department of Business Oversight and Bureau of Real Estate to govern brokers acting as escrows. The license exemption is personal and applies only to the broker. The broker may delegate any duties to be performed under the broker's supervision, such as clerical functions. The broker must be the selling or listing broker in the transaction or a party to the transaction. Escrows must be only an incidental part of the broker's real estate business. The broker may not form an association with other brokers for the purpose of conducting an escrow business. The broker can advertise services as an escrow only in the context of the real estate brokerage. The broker cannot use a fictitious business name or one with the word escrow escrow in the title or do anything to mislead the public as to the general nature of the brokerage. All escrow funds must be kept in a trust account subject to inspection by the Real Estate Commissioner. California_E_Principles_10E_book.indb 301 the 23rd of May 2017 2:30 and 43 seconds p.m. 3:02 California Real Estate Principles 10th edition. For example, Sally Salt, a licensed real estate broker, has decided that she can supplement her income nicely by handling escrows for other real estate brokers. Can she? Number. Unless she becomes licensed as an escrow agent, broker Salt can act as an escrow only for transactions in which she is a party or the agent of one of the parties. Other principles and prohibitions. Impartiality. The escrow holder should be impartial to all parties to a transaction. If the escrow holder receives conflicting instructions from the parties, neither instruction should be followed. Only written instructions signed by all parties should direct the escrow. Oral instructions alone should never be followed. Interpleader. A conflict may arise between the parties as to the contract terms and resulting escrow instructions. If so, the escrow holder can bring a legal action known as interpleader. By this action, the escrow holder forces the parties to have their rights and obligations clarified in court. Above all, the escrow holder should not act as arbitrator or mediator or attempt to advise the parties on a course of action. It follows that an escrow holder should not give legal advice or speak to the parties on a matter that should be handled by the real estate broker. Disclosure of material facts. Because of the escrow holder's position, material facts concerning the transaction that are unknown to the parties may come to the escrow holder's attention. If the escrow holder does receive any such information, it should be disclosed immediately to the relevant parties. On the other hand, the escrow agent is not a guarantor of the soundness of a transaction. There is no duty to conduct an independent investigation or to warn a party that a deal is not in that person's best interest. The escrow holder should be aware of the agency relationship and treat the information in its possession accordingly. As stated earlier, there may be information to which only one principal is entitled, such as the dealings of buyer and lender. Under no circumstances is information concerning the escrow to be released to non-parties. Record keeping. Accurate, up-to-date records and accounts are absolutely essential. Escrow files should be added to or revised daily if necessary. Likewise, an account never should be overdrawn. If documents or funds that were not part of the escrow instructions are submitted to the escrow holder, they should not be accepted. Full and clear information. It is in the best interests of the escrow holder, as well as the parties, to make the settlement statements that are supplied at the conclusion of the transaction as clear and easy to follow as possible. There should never be ambiguities or missing information. 303 For example, Betty buyer and Sam seller are in escrow. Betty finds out that her loan will take longer to process than initially expected. She informs Sam, who agrees to a 2-week extension of the closing of the sale. Sam phones Reliance Escrow to relay the information. What date will the escrow holder treat as their termination date of the contract of sale? Unless both Betty and Sam sign a written amendment to the escrow instructions drawn up by the escrow holder, the escrow holder must treat the original termination date as still in effect. Exercise 10.1.1 After a much delayed sale closing, the parties are waiting only for their proration of all of the expenses associated with the property, an apartment building. The seller, anxious to complete the sale, phones their escrow agent, telling the person handling the transaction to just charge all expenses for this month to me, to expedite things. Can the agent do so? Why? 2. Tom Takahashi handles escrows for Sunny Acres Title Insurance Company. Tom receives signed escrow instructions from the seller and buyer of a tract of vacant land in Sunny Acres Heights. The day before closing, Tom learns that the property has suffered severe mudslide damage. Should Tom do anything with that information? Escrow procedures. After an offer to purchase has been accepted by a seller of real estate, it is important for buyer, seller, and brokers to make sure that all necessary details have been covered. If there are no vague or ambiguous provisions between the parties, the escrow process will be that much smoother. Remember that an agent is considered to be involved in a transaction even if the agent will not receive a commission or fee. Transaction checklist. Both buyer and seller will be concerned that all of the points discussed in the negotiations are included in the final contract terms. The real estate agent, also, must make sure that certain information is known to the parties. Has the broker made the appropriate inspection of the property? Is the buyer fully informed of all material facts concerning the property? Have the appropriate disclosures been? California_E_principles_10E_U10.int 303 the 27th of April 2018 2:58 and 43 seconds p.m. 304 California Real Estate Principles 10th edition. Made regarding the broker's agency relationship to seller and buyer. Have seller and buyer confirmed their understanding of the broker's role in the transaction? Have all other necessary disclosures been made? The use of a checklist, such as the one in Figure 10.1, will help ensure a successful sale closing. Once the requirements of the transaction are clearly established, the escrow holder knows what to expect from buyer and seller. Some of the important elements of a successful transaction are included in the items listed in Figure 10.1, such as a property appraisal acceptable to the lender. If the lender isn't satisfied that the property is sufficient collateral for the loan will not be granted and the borrower will make use of the loan contingency clause. Figure 10.1. Transaction checklist. Transaction checklist, _date and place of signing of contract by buyers, _full name, address, and marital status of each buyer. If a business, the type of business, corporation, general partnership, etc., should be specified. _purchase price, amount of deposit, and how the deposit will be made, such as by personal check or cashier's check. The person who will hold the deposit prior to closing, the escrow holder, for instance, also should be named. Financing terms. The buyer may be required to obtain a loan commitment by a certain date. The buyer should always have the protection of a loan contingency clause in the purchase contract, such as this offer is subject to and conditioned upon the buyer and property qualifying for and the buyer obtaining said loan within X days of opening of escrow. Without such protection, the buyer could risk forfeiting the deposit if the sale were frustrated by the buyer's or property's failure to qualify for the loan. If the buyer will assume an existing loan, some provision should be made for the buyer's approval of the existing loan's terms. Encumbrances that affect title, such as restrictions and easements. These should be clarified as acceptable to the buyer, or a time period should be given in which a preliminary title report is to be received and accepted by the buyer. If the seller will retain any interest in the property, such as an easement, that interest should be specified, as should rights of any person, such as tenants, currently in possession. Acquired property inspections and who will pay for them. The person who will pay for necessary repairs also should be named. The buyer usually will want a final walkthrough of the property just before closing to ensure it has been properly maintained and repaired, if necessary. Names of escrow holder and title company, as well as who is to pay the escrow fee, title insurance premium, and applicable county and city documentary transfer taxes and other fees. Description of any other documents required from either party. Names of all real estate brokers and salespeople involved, as well as the agency role of each in the transaction, the negotiated sales commission, and who will pay the commission. Contract termination date, how long the buyer's offer is open, and when the buyer will take possession. Signatures of all parties, including brokers. If a salesperson signs on behalf of a broker, the broker must review the contract within 5 days, initialing and dating it. The real estate law provides for delegation of the broker's responsibility in certain instances. Responsibilities of the buyer will assign escrow instructions. A checklist is a necessity to make sure all details, especially disclosures, have been covered. California_E_principles_10E_book.ind 304 the 23rd of May 2017 2:30 and 44 seconds p.m. Unit 10 Escrow and Title Insurance 305A. Provide a copy of any contract of the buyer that will affect the escrow, such as a buyer-broker agreement. A. Review the preliminary report and any encumbrances of record. A. Review all loan documents, including new loans, loans to be assumed, loans buyer is taking title subject to, and disclosure information if the seller is taking back a purchase money mortgage. A. Obtain hazard insurance coverage. A. Review and approve all property inspection reports and arrange for a final property inspection before closing. A. Examine the bill of sale covering any items of personal property to be conveyed separately at closing. And A. Deposit the cash needed to cover down payment, closing costs, and other expenses, such as revolving debt and collection accounts, if any, to be paid off at closing. Usually, expenses may be negotiated between buyer and seller. An exception may be a government-backed loan. The buyer typically pays for a buyer's share of escrow fees, a loan fees, a appraisal fee, a credit report, a lender's title insurance, a recording fees for documents prepared on the buyer's behalf, a notary fees for documents prepared on the buyer's behalf, a prepayment of loan interest, a assumption fee, if applicable, a new fire or other hazard insurance premiums, a FHA mortgage insurance, and any prorated expenses the seller already has paid. Responsibilities of the seller. The seller will assign escrow instructions. A. Provide a copy of any contract of the seller that will affect the escrow, such as the listing agreement, and any required disclosure statements. A. Include the seller's deed and title insurance policy and any unrecorded instruments affecting title. A. Provide information on the present status of existing loans, including consent to the submission of a beneficiary statement or demand for payoff, as California_E_principles_10E_book.indb 305 the 23rd of May 2017 2:30 and 44 seconds p.m. 3:06 California Real Estate Principles 10th edition required, and financing disclosure information if the seller is taking back a purchase money mortgage. A. Provide certificates or releases on any mortgage, judgment, mechanics lien, or other encumbrance to be paid off through escrow. A. Provide any existing hazard insurance policies to be assigned to the buyer. A. Provide any subordination agreement required by the contract. A. Provide tenant information, including their names, rent and deposit information, assignment of all leases to buyer, and the fact that tenants have been notified of the change of ownership. A. Provide executed deed on real property to the buyer. A. Provide executed bill of sale on any items of personal property, or security agreement if purchase is by installments. And A. Make available any other documents or approvals needed to close the sale. Again, most sale expenses are open to negotiation. The seller typically pays for a seller's share of escrow fees, a title insurance, a home warranty plan, if any, a structural pest control report and clearance, if needed, a the beneficiary statement, a existing loan payoff and prepayment fee, if any, a mortgage discount points and non-allowable fees on behalf of the buyer in FHA transactions, all fees in VA transactions, a notary fees on documents prepared primarily on the seller's behalf, a various transfer fees, a cost of required disclosure reports, and any arrearages for taxes or other prorated items. Responsibilities of the real estate agent. When a real estate agent represents a party in a transaction, there are steps the agent can take to ensure that the transaction is successfully completed. In general, a real estate agent's responsibilities are to keep informed of the progress of the escrow and assist the escrow officer when necessary. The agent usually will deliver copies of the executed, signed, purchase contract to the parties. Deliver and explain the escrow instructions to the parties in the transaction, and ensure that the parties have signed and returned the instructions. It may be best to have the parties go to the escrow office for signatures. Provide all necessary property and transfer disclosure reports. California_E_principles_10E_book.indb 306 the 23rd of May 2017 2:30 and 44 seconds p.m. Unit 10 Escrow and Title Insurance 307. Provide the escrow officer with copies of the seller's payment coupons on any loans, a property profile or copy of the grant deed indicating the present owner's tax information, and any other items that will assist the escrow officer. Advise the buyers, particularly a married couple, to obtain legal advice on how to take title. Agents and escrow officers, unless licensed to practice law, may not give this advice. Remind the seller to continue to make all payments on loans during escrow and maintain the property as required by the purchase agreement. Advise the parties, buyer and seller, to notify the escrow officer if they have plans to be traveling during the escrow period, especially if they plan to be out of the country. If so, an arrangement, such as a power of attorney, must be made to ensure that the transaction is not delayed. Review the preliminary report as soon as it is available and explain its contents to the buyer. Assist the buyer in obtaining any necessary loans and place the lender in contact with the escrow officer. Assist the buyer in obtaining an inspection of the property and review the inspection with the buyer afterward. Assist the seller in ordering a timely pest control report and review the required corrective work. Make sure that the parties deliver the required documents and funds to escrow and provide any assistance the parties request or require that is within the agent's abilities, to ensure that the parties fulfill their obligations and are fully informed of the progress of the transaction. Figure 10.2, Cooperating Broker Compensation Agreement and Escrow Instruction. The real estate broker for the seller may share the sales commission with a cooperating broker who brings the buyer to the transaction. An agreement between their two brokers will ensure that both understand the compensation that will be paid at the closing of the transaction. The Cooperating Broker Compensation Agreement and Escrow Instruction shown in Figure 10.2 can be used both to clarify the compensation that the cooperating broker will receive and to provide for payment of the compensation by the escrow holder. Responsibilities of the escrow holder. Although local practices may vary somewhat, the duties of the escrow holder generally include those listed below and in the flowchart shown in Figure 10.3. Throughout this section, we refer to the escrow officer, someone employed by an escrow company or escrow holder to handle escrow transactions. The escrow officer follows the specific procedures required by the escrow company or escrow holder, which vary from company to company and may be quite detailed. Escrow instructions. The escrow holder in a residential property sale typically uses a printed form of escrow instructions listing what buyer and seller must do. Both buyer and seller must sign the instructions. The instructions will include such items as the purchase price, terms, financing provisions, how buyer's title is to vest, encumbrances that will affect the buyer's title, conditions affecting the transaction, date of closing, required inspections and other reports, expenses to be prorated, date on which buyer will take possession of the property, documents involved, and disbursements to be made and who will pay for them. Since 1999, the Car Residential Purchase Agreement, Form RPA California, described in Unit 7, has included joint basic escrow instructions. Most escrow companies now send out instructions that serve as a supplement, addendum to the contract, stipulating their additional general provisions of escrow practice and providing disclosures required by federal and state laws applicable to escrow agents. California_E_principles_10E_book.indb 309 the 23rd of May 2017 2:30 and 47 seconds p.m. 3:10 California Real Estate Principles 10th edition. Figure 10.3. The escrow process. Escrow holder orders title search, makes instructed prorations and adjustments, requests and receives necessary funds, audits file to verify sale ready to close, orders final check of title and recording of documents, closes the sale by preparing and delivering settlement statements and transferring funds and documents of title. Sense accepts purchase contract that includes joint escrow instructions. Sense prepares escrow holders general instructions and any specific instructions. Sense receives and reviews preliminary report. Sense requests and receives statements from present lenders. Sense receives termite and other inspection reports. Sense receives new loan package. Sense receives fire and other insurance policies. Sense receives other required information and statements. Title search. Following a request by the escrow officer, The title company named by the parties searches the title records and provides a preliminary report. The preliminary report should identify the property and current owner of record, as well as any recorded liens or other encumbrances. The escrow holder reads the report to verify the legal description and to determine if there are any child support liens, taxes, or judgments for which a release will be required before the close of escrow. The buyer and the buyer's agent should review the preliminary report. California_E_principles_10E_book.INDB 310 the 23rd of May 2017 2:30 and 49 seconds p.m. Unit 10 Escrow and Title Insurance 311 Lender's Statements. If the property is encumbered by any loans, the escrow officer contacts all lenders. Each is asked to provide either a demand for payoff, if the loan is to be paid in full through escrow, or a beneficiary statement, if the buyer will take title subject to loans of record, termite and other reports. The escrow officer receives all reports authorized by the escrow instructions and obtains the necessary approvals of those reports by the parties. Such reports might include a structural pest control report or a roof, an electrical, a foundation, or a soil report. If the seller has agreed to pay for indicated repairs through escrow, provision for that payment at closing must be made. New loan package. Most often, the buyer obtains new financing. In that case, the escrow office receives the appropriate loan documents and instructions, obtains the buyer's signature of approval, and makes sure all conditions are met before funds are disbursed at closing. Hazard insurance policies. Prudent buyers arrange to insure property they purchase, effective as soon as they take title. Lenders will insist on a policy that adequately covers the cost to repair or replace the improvements. The escrow officer must obtain a copy of the policy commitment. Other information and statements. The closing may require information on property taxes, assessments for improvements such as sewers, utility payments, and other property expenses that will require an accounting at the time of closing. If the property is rented, rent payments and security deposits also may be part of the computations. Other statements, such as the FHA appraisal value required in an FHA insured sale, are required as indicated in Unit 9. Prorations and adjustments. The escrow holder, who has received all of the required information, then computes the necessary prorations of items charged to buyer and seller. These may include insurance, taxes, assessments, utilities, and security deposits and rents. Taxes are prorated as of July 1st, the first day of the tax year, or January 1st, the beginning of the second half of the tax year. The escrow holder also prorates their buyer's mortgage interest as of the date funds are disbursed. Because interest payments always are made in arrears, that is, for the month just passed, interest for their number of days from closing to the start of the first full month must be computed. In most prorations, a 30-day month is used. In interest prorations, the lender sometimes insists on the actual number of days in the month as 31 days. For instance, prorations typically assume that the buyer's rights and obligations begin on the day of closing. The buyer is responsible for any payments to be made for that day, such as property taxes and homeowners association dues. The buyer will receive credit for any proceeds, such as rent income, that have been received for that day. Tax prorations will depend on whether the tax has been paid. Prepaid taxes from the day of closing will be a credit to the seller and debit to the buyer. If current tax due has not been paid, the seller will be debited and the buyer credited the amount of tax owed up to the day of closing. California_E_principles_10E_book.INDB 311 the 23rd of May 2017 2:30 and 49 seconds p.m. 312 California Real Estate Principles 10th edition. Math concepts. Proration is the allocation of property expenses and other charges to seller or buyer. Rents, taxes, insurance premiums, and interest on loans are only some of the expenses prorated at the time of closing a real estate transaction. Unless otherwise agreed, the standard term of 360 days per year, 30 days per month, is used. Usually, property expenses up to the day of closing are the responsibility of the seller. Depending on local custom, Expenses as of the day of closing usually are the responsibility of the buyer. For example, Ben Phillips is buying a 4-unit apartment building. Monthly rents total $2,350 and are due on the first day of the month, and the date of closing is October 18. What part of the October rents is Ben entitled to receive? Using a 30-day month, rental payments are $78.33 per day. $2,350 a tilde middle. 30. Ben will receive rents for 13 days, October 18th through October 30th. Ben would thus be credited with $1,018.29 for October rents at closing, $78.33 a tilde, 13 days. Using a 31-day month, rental payments are $75.81. $2,350 a tilde middle. 31 per day. Ben then would be credited with rents for 14 days, or $1,061.34, $75.81 a tilde, 14. If the actual number of calendar days is required, a table such as the one below can be used to calculate the number of days quickly. To use the chart, add the applicable number of days in the month to the nearest full preceding month. For example, the period from June 1st to February 15th would be 260 days at 245 days from June 1st to February 1st, and 15th days in February. The chart does not include February 29th, the extra day in the leap year every 4 years. In a leap year, add an extra day to all calculations that include the last day of February. 313. For example, Jim and Janet Razer are buying the Landy house. The date of closing is June 16th, and the key will be given to the Razers that day. The Landys have already paid both installments of the fiscal year's tax bill of $1,987.20. What amount will be charged to the Razers? The date of closing is June 16th. The Razers must pay for property taxes from June 16 to the end of the fiscal year, June 30th. They thus will be charged for 15 days, or $82.80. The yearly payment of $1,987.20 is divided by 360 and that number is multiplied by 15. Funding. The escrow officer requests the appropriate party to deposit the required funds in the escrow account. The lender provides the committed percentage of the purchase price. The borrower, will provide whatever amount is necessary to cover the remainder of the purchase price, taking into account any deposits already made as well as costs of closing, such as fees and prorations. Audit of the file. The escrow officer double-checks that all conditions before closing have been met, including all necessary funding. Final title review. The escrow officer orders the title company to make a final check of the seller's titles at the close of business of the escrow completion date. This is done to verify that the title has not changed or been encumbered since the time of the preliminary report. If no change has occurred, the title company records all transaction documents. Closing of the sale. After the escrow officer has confirmed the recording of the transaction documents, the escrow is considered closed. The escrow holder will send settlements to buyer and seller, disperse funds, and deliver documents as soon as possible. Note: California law permits the lender to charge interest for no more than 1 day before the date that the loan proceeds are dispersed out of escrow or dispersed to the borrower or another party on behalf of the borrower. The law applies to notes secured by a mortgage or deed of trust on property of 1 to 4 residential units. Settlement statements detailing transaction costs to buyers and sellers of dwellings of 1 to 4 units are required by the Real Estate Settlement Procedures Act, RESPA, discussed in Unit 8. A closing disclosure form appears in Figure 10.4. Exercise 10.2. Using the first 3 pages of the closing disclosure form that appears in Figure 10.4, enter the details of the following residential sale transaction. Michael Jones and Mary Stone are purchasing the single-family house of Steve Cole and Amy Doe located at 456 Somewhere Avenue, Anytown, California. Michael and Mary live at 123 Anywhere Street, Anytown, California 12345. Steve and Amy live at 321 Somewhere Drive, Anytown, California 12345. Figure 10.4. Closing disclosure. 319. The lender is Ficus Bank. The settlement agent is Epsilon Title Company. The date the closing information was issued is April 15, 2013. The closing date and disbursement date is April 15, 2013. The file number is 123456. The sales price is $180,000. There is a conventional 30-year loan of $162,000 with a fixed interest rate of 3.875% and the monthly principal and interest payments of $761.78. Their loan ID number is $123,456,789. And the MIC number is 000654321. The loan has a prepayment penalty that can go as high as $3,240 if the loan is paid off during the first 2 years. The loan is amortized, and there is no balloon payment. Because the loan is a 90% loan, private mortgage insurance is required for the first 7 years at a cost of $82.35 per month. It is terminated after the first 7 years. Escrow amounts that can increase over time for property taxes and homeowners in the amount of $206.13 are required over the 30-year period of the loan. The estimated monthly payments for the first 7 years total $1,050.26. The estimated monthly payments for years 8-30 total $967.91. The total estimated amount for monthly property taxes, homeowners insurance, and homeowners association (HO) assessments is $356.13. Property taxes and homeowners insurance is paid in advance in escrow. HO dues are not paid in escrow but are paid directly by the borrower to the HO. The total closing costs paid by the borrower total $9,712.10. The total cash to close from the borrower totals $14,147.26. The following loan costs are paid from the borrower's funds at settlement. The total loan origination charges totaled $1,802. A 0.25% of loan amount, points, $405. A application fee of $300. A underwriting fee of $1,097. A services the borrower did not shop for totaled $236.55 and included an appraisal fee to John Smith Appraisers, Incorporated, that was paid by others in the amount of $405 and amounts that the borrower paid, including a credit report fee to Information, Incorporated, that was paid before closing for $29.80. Are the following fees that are to be paid at closing: a flood determination fee to Info Company for $20, a flood monitoring fee to Info Company for $31.75, a tax monitoring fee to Info Company for $75, a tax status research fee to Info Company for $80. A services the borrower did shop for totaled $2,655.50 and included a pest inspection fee to Pests Company for $120, a survey fee to Surveys Company for $85, a title insurance binder to Epsilon Title Company for $650, a lender's title insurance to Epsilon Title Company for $500, a settlement agent fee to Epsilon Title Company for $500, a title search to Epsilon Title Company for $800. California_principles_10e_book.indb 319 the 23rd of May 2017 2:30 and 53 seconds p.m. 3:20 California Real Estate Principles 10th edition. Thus the total loan costs that the borrower paid were $4,694.05. Of which $4,664.25 was to be paid by the borrower at closing and $29.80 was paid before closing. Taxes and other government fees totaled $85 and included $40 for recording their deed and $45 for recording the mortgage. for a total of $85 to be paid by the borrower at closing. The buyer had $2,120.80 in prepaid amounts that included a homeowner's insurance premium for 12 months to insurance company of $1,209.96, a prepaid interest at $17.44 per day from April 15, 2013, to May 1, 2013. For a total of $279.04, and a 6 months of property taxes to any county, USA, for $631.80. The borrower paid an initial escrow account payment at closing of a total of $412.25 for the following: a $201.66 for homeowners insurance for 2 months at $100.83 per month, a $210.60 for property taxes for 2 months at $105.30 per month. There was also an aggregate adjustment for expenses at closing for initial escrow payments of $01. Other payments by the borrower at closing totaled $2,400 and included an Ho capital contribution to Hoacre, Incorporated, of $500, an Ho processing fee to Hoacre, Incorporated, of $150, a home inspection fee to Engineers, Incorporated, of $750, and a $1,000 to Epsilon Title Company for an owner's title insurance policy. This resulted in total other costs paid by the borrower of $5,018.05. The total closing costs paid by the borrower were $9,712.10, consisting of $9,682.30 paid by the borrower at closing and $29.80 paid before closing. The mandatory loan estimate form indicated the following loan estimates: a total closing costs of $8,054, a down payment, funds from borrower of $28,000, a deposit of $18,000. The total cash to close totaled $16,054. The final amounts equaled a total closing costs of $9,712.10, a closing costs paid before closing of $29.80, a down payment, funds from the borrower of $18,000, a deposit of $10,000, a seller credit to buyer of $2,500, and a adjustments and other credits of $1,035.04 for a total of $14,147.26. California_E_principles_10E_book.indb 320 the 23rd of May 2017 2:30 and 53 seconds p.m. Unit 10 Escrow and Title Insurance 321. The summaries of the borrower's transactions consisted of money due from the borrower at closing totaling $289,762.30, which included a $180,000 for the sale price of the property, a $9,682.30 in closing costs paid at closing, and a Ho dues from April 1, 2013, to April 30, 2013. Amounts already paid by or on behalf of the borrower at closing totaled $175,615.04 and included a deposit of $10,000, a loan amount of $162,000, a seller credit of $2,500, and a other credits, including a rebate from Epsilon Title Company of $750 and an adjustment for an item that was unpaid by the seller for city taxes from January 1, 2013, to April 14, 2013, of $365.04. The calculation of the total due from the borrower at closing totaled $189,762.30. Of which the total already paid by or on behalf of the borrower at closing was $175,615.04, leaving a cash to close from borrower in the amount of $14,147.26. The other costs paid by the seller at closing included a transfer tax to any state of $950, Section E, and A. Other expenses, Section H, including a home inspection fee to engineers, Incorporated, before closing of $750 and other following amounts to be paid at closing: a home warranty fee to Excise Warranty, Incorporated, of $450, a real estate commission to Alpha Real Estate Broker of $5,700, a real estate commission to Omega Real Estate Broker of $5,700. The total amount of closing costs to be paid by the seller at closing totals $12,800. And the total amount paid by the seller before closing is $750. The summaries of the seller's transaction consisted of money due to the seller at closing totaling $180,080, including a sale price of the property of $180,000 and an adjust for items paid by the seller in advance for HO dues from April 15, 2013, to April 30, 2013. Of $80. It also amounted to a total due from the seller at closing of a total of $115,665.04, including A. Closing costs paid at closing, J. of $12,800, A. Payoff of a first mortgage loan of $100,000, a seller credit to the borrower of $2,500 and an adjustment for an item unpaid by the seller consisting of city taxes from January 1, 2013, to April 14, 2013, of $365.04. Thus, the total due to the seller at closing is $180,080, and the total due from the seller at closing is $115,665.04, resulting in total cash to the seller of $64,414.96. California_E_principles_10E_book.indb 321 the 23rd of May 2017 2:30 and 53 seconds p.m. 3:22 California Real Estate Principles 10th edition. Cancellation of the escrow. Not every transaction reaches a successful closing. The escrow can be cancelled and the deposit returned to the buyer, only if both parties provide written instructions to the escrow holder. The cancellation of contract, release of deposit, and cancellation of escrow form that appears in Figure 10.5 provides for both buyer and seller to authorize the escrow holder to cancel the escrow. The agents should check with the escrow officer for cancellation fees before having buyer and seller complete the form to ensure that all costs are accounted for. Figure 10.5, cancellation of contract, release of deposit, and joint escrow instructions. Title insurance. In several earlier units, we have referred to the concept of marketability of title. Real estate has value when it can be marketed, sold. It will be easiest to sell when there are no clouds on the title. Land may change hands many times over the years of documented ownership. During that time, many parties may have property rights in the land, including water and mineral rights. Heirs of deceased owners may not come forward. A spouse may not join in a conveyance. How can a purchaser be sure the seller owns all of the rights of ownership being sold, whatever those are? Various forms of title inspection have developed in response to the need for some guarantee that the seller has good title that a reasonably prudent person would accept. Abstract of title. In Unit 4, we mentioned the chain of title from one property owner to the next. By laboriously going back through all pertinent records, including tax records and court judgments, an abstract of title can be prepared. An abstract of title lists every recorded change of ownership or claim on the property being examined. The abstract is accompanied by a lawyer's opinion of title, which comments on their present validity of any claims of lien or ownership. This way of ensuring marketability of title is usually a lengthy, expensive process. Certificate of title. When title abstractors began to perform quantities of title research, their own records became significant sources of title information. Abstract companies compiled that information into lot books referencing documents by property location, and general indexes listing names of owners alphabetically along with documents affecting their property interests. Eventually, title examiners needed to check only their company's title plant containing the lot books and indexes. They then could prepare a certificate of title stating the property's owner of record and listing any present encumbrances, usually without an attorney's opinion. The certificate of title is not often used today. Guarantee of title. The guarantee of title was next made available. It not only provided for examination of title but guaranteed the title as described. The title examiners using this device thus took on the responsibilities of insurers, which led to the next step in the formation of the modern title insurance industry. Title insurance policies. Although the guarantee of title was useful, it was based, as were the earlier forms of title inspection, on examination of the public records. Unfortunately, there can be impediments to good title, such as forgeries or documents procured through California_E_principles_10E_book.indb 324 the 23rd of May 2017 2:30 and 56 seconds p.m. Unit 10 Escrow and Title Insurance 325 Fraud that aren't revealed by examining public records. And not all documents may have been recorded. How, then, could the buyer be protected? The solution was the development of title insurance. Title insurance is available in several forms of coverage but basically insures against possible unrecorded risks. Title insurance can be for the benefit of either property owner or lender and takes effect as of the day of closing. Title insurance companies. Title insurance companies in California are regulated by the state. A title insurance company must provide a guarantee fund to the insurance commissioner and set aside a certain amount from premiums each year as a title insurance surplus fund. Fee schedules must be available to the public. Referral fees for title business are illegal. No referral fees may be paid by any title insurer, underwritten title company, or escrow company as an inducement for the placement or referral of title business. This prohibition includes both direct and indirect payments, in any form, whether or not the payment results in actual placement or referral of title business. It is part of both state law, California Insurance Code 12404, and federal law, Real Estate Settlement Procedures Act. Standard policy. The standard policy of title insurance assumes that the policyholder is able to inspect the property before purchase and determine how the land is being used and by whom. The standard policy covers forgery, recording defects, improper delivery of a document of title, and incapacity of the grantor. The standard policy of title insurance excludes a rights or claims of persons in actual physical possession of the property, even though not shown in the public records, easements and liens not shown in the public records, any title defects known to the policyholder at the time of insurance or that would be shown by a survey, mining claims, reservations, water rights, or changes in land use dictated by zoning ordinances. The California Land Title Association, CLTA, the trade association of the state's title companies, has a standard form of title insurance that its members use. Part of one of those policies, listing covered title defects as well as exceptions, appears in Figure 10.6. In practice, the standard policy of title insurance also includes a legal description of the property and lists encumbrances currently of record. If more thorough coverage than that provided in a standard policy is desired, another form of policy is available. California_E_principles_10E_book.indb 325 the 23rd of May 2017 2:30 and 56 seconds p.m. 326 California Real Estate Principles 10th edition. Extended coverage policy. There is an extended coverage policy that is intended primarily for the benefit of lenders. The lender may be located some distance from the property, even out of state, and may have no easy or inexpensive method of examining the property being encumbered. The American Land Title Association, ALTA, has a variety of policies, including one that extends coverage to insure property against rights or claims of persons in physical possession of the property, even by virtue of an unrecorded instrument, A. Unrecorded easements and liens. A. Rights or claims that a survey would reveal. A. Mining claims. A. Reservations and A. Water rights. The property owner also can be insured by such a policy, although the all-to-extended coverage policy will exclude any title defects known to the buyer at the time of purchase. Note: the all-to-extended coverage policy, like the CLTA policy, excludes changes in land use brought about by zoning ordinances, unless there is recorded notice of enforcement of the specified zoning. For an additional charge, a title insurance policy will also include protection against such occurrences as post-policy issuance forgeries and forced removal of an existing structure due to prior building permit violations. Figure 10.6, Policy of Title Insurance. Preliminary report. After the title insurance policy is ordered and before the sale closes, the title insurer submits a preliminary report to the purchaser through the escrow holder. The preliminary report A describes the property and names the owner of record. A indicates any outstanding taxes, bonds, and assessments. A identifies any conditions and restrictions on the property and A lists any recorded encumbrances or other items that will be exceptions to the title insurance coverage. Encumbrances need to be cleared before the loan can be made, because the title insurance will not protect the lender's interest against them. Title insurance fees. Title insurance is paid for in a single payment. The expense of title insurance can be paid by either buyer or seller, as the parties negotiate. The policy fee for title insurance benefiting the lender typically is paid by the borrower, buyer. A title insurance benefiting the buyer could be paid for by either buyer or seller. North versus South. In Northern California, the customary practice is for the owner's title insurance policy to be paid by the buyer. In Southern California, the customary practice is for the owner's title insurance policy to be paid by the seller. Except for the normal compensation paid to employees, no person acting as an escrow agent in California is permitted to pay any commission, fee, or other consideration to anyone in exchange for referring, soliciting, handling, or servicing escrow customers or accounts. This provision, Civil Code 1057.5, also prohibits the use of any such compensation arrangement with any person acting in a dual capacity, or having a direct or indirect interest in the escrow. Title companies as escrows. Because use of title insurance is so common in California, title companies frequently serve as escrow agents, particularly in Northern California. California_E_Principles_10E_book.indb 330 the 23rd of May 2017 2:31 and 8 seconds p.m. Unit 10 Escrow and Title Insurance 331. Notice: if no title insurance. Title insurance has become such a necessary and accepted part of real estate transactions that California law, Civil Code 1057.6, requires notice to be given if title insurance will not be provided. If title insurance will not be issued in an escrow transaction for their purchase or simultaneous exchange of real property, the purchaser or exchange parties must receive the following notice in a separate document that must be signed and acknowledged by them. Important: in a purchase or exchange of real property, it may be advisable to obtain title insurance in connection with the close of escrow, since there may be prior recorded liens and encumbrances which affect your interest in the property being acquired. A new policy of title insurance should be obtained to ensure your interest in the property that you are acquiring. Exercise 10.3 state the form of title protection that has each of the following characteristics. 1. Statement of ownership of property, using the title company's own records. 2. Statement of ownership of property, backed by the title company's guarantee. 3. Title insurance excluding water rights. 4. Title insurance including water rights. 5. Complete documentation of all recorded rights and claims of property ownership. 6. Title insurance excluding changes in land use brought about by zoning ordinances, with or without recorded notice.
Perfect.